Morning, everybody. Welcome to our weekly market update. Today I've got Maddie and Will with me. How are you guys?
Good, thank you. How are you?
Good morning. Good, thank you. What's been happening in the property management department this week, Maddie?
We're flat out.
Yeah.
We're definitely not complaining about it. It's a great problem to have.
Yes.
We done a full turnaround from this time 12 months ago where we had overall properties
Yes.
and too many tenants, and now we have 14 properties online.
Yes.
And it's still a consistent amount of tenants looking, but they can be a little bit more picky now.
Yeah.
With obviously they're a bit spoiled for choice. So we've got the 14 properties online. We have 3 coming up this week, and in the pipeline we've got another few, probably 6-ish, that we know of coming up, and that's not even counting the appraisals that we've been to. They've been free flowing, so we've been going to them pretty consistently, and they're just been converting just for whatever reason.
Have you found many of those people that are getting sale and rental appraisals and are not happy with the sale appraisals, so they're deciding to rent the property out?
Yeah, it has been a bit more common recently that we go with a sales agent and then they'd come back to us, which is a welcome surprise.
Yes,
because,
2 years ago it was the other way around.
Yeah, we'd go and be like, we'll give you that figure, but you're not going to be happy with it. But now, it is. And obviously with the market rents increasing as well, it's a little bit more nicer for the landlord to chuck it over to us because they will achieve a higher income from it.
Yeah.
But with the trade-off to having so many properties online is that you have to be careful of your price point as well, which I've been harping that for a while now. But you can't price it too high, otherwise the good tenants will go for the lower properties. So.
Yes. Yeah. Okay.
Yeah.
What's been happening in the sales department, Will? We've had some open homes on the weekend.
Yeah, we had 4 opens this weekend. We got 1 or 2 groups through each of them, so not crazy numbers, but at least there was people showing up. Things aren't quite as busy as they are on the rental side of things. I had 4 phone calls this weekend and a walk-in, but they were all actually meant for Maddie, so I sent them her way.
Yes.
We're not getting crazy amounts of listings, but we're still getting a few ticking along.
Yep.
There's still plenty of buyers out there, but as you were saying earlier, they're quite specific in what they're looking for, so we need more listings so we can match the buyers to them.
No, buyers that have got time to look at the moment and not things are not quite rushing off the market like they were, are they? So,
No.
Yeah.
Definitely not.
And I guess the being specific around that, like I was reading a report from America a few weeks ago where they said that it was around 80% of people that purchased their properties in the COVID years, so 2020 and 2021, were unhappy with their purchase.
Right.
And they're tipping that a large percentage of those people will sell again in the next couple of years and buy something that they're happier with because they just felt forced in that tight congested market. And a lot of America, even though we saw a boom, they had an even faster, bigger, more rapid boom than Australia in a lot of states. So it's certainly, there was a lot of that where people have probably compromised on multiple things, and rather than buying something that they're completely happy with because they were missing out on so many and being the 3rd or 4th offer or 2nd offer, and then just grabbing something even if it wasn't really right for what they're looking at.
But also I guess interest rates as well could have an impact on that because now they're paying these phenomenal interest rates on a property that they're not overly happy with anyway. So they're like, well, why do I keep it?
Yes, and look, there's a bit of that. There's certainly some interesting numbers out this week on the CoreLogic report. Looking at rentals is still showing a 10% year-on-year increase, so 10% annual rental increase from this time last year. So the rent should be 10% more, and that was about 10% the year before and nearly the year before that, I think. So it's sort of been pretty consistent. But we'll probably see that peak now and level out. But there has been a large proportion of rents where it might have been not rented, like a sitting tenant for 3 or 4 years. So they might have been at 300 and the market might have moved to 380 or something. So when that tenant moves on and it's re-advertised, it might be at 380 because that, and then you're still picking up a little bit of that. But I think once that filters through the system, then we've sort of reached our new market point for properties for rent. The sales numbers are reasonably consistent and probably a little bit scarier than most people would like to hear. Looking both in the Huon Valley, statewide, regional, Hobart, all the markets are pointing around the 10% fall over the last 12 months in prices. So it's looking at 12.9% in the last report for Hobart and 9.7 for the regionals. So looking at that, what's that sort of mean? And look, everyone can read into that differently. Practically, that a portion of that is that there's a lot of transactions happening in the lower end of the market at the moment. So the peak transactions are between 400,000 and 600,000. And then when you look in a lot of the market, you go, gee, there's not many houses for sale between 400,000 and 600,000. So those ones are actually all selling. And then the next is 600 to 800, which is the next highest proportion. Then the next is below 400, which you go, well, where are all the below 400s? And then you start going above 800 for the smaller percentages and above 1 million, above 2 million. So it's actually, quite disproportionate where there's a lot of those transactions, probably between that 500,000 and 700,000 range. So a lot of people can afford that. And then there's a lot less people that can afford the higher end. So we're seeing still reasonable activity in those affordable price ranges because of that. And a lot less activity probably in the higher price ranges. It's quite an interesting thing. It's still the data is still fairly new and it's coming through, and we're watching it closely. But I think a lot of the properties that have come to market are probably priced at still a 3 or 4% down, and things on that where there's certainly looking at all those numbers, it's definitely looking at 10% down. So we might have a little bit more to sort of come off of the asking prices to actually match up across the market, looking at some of those. And you're starting to see the days on market are in the 60s and 70s in most suburbs now, compared to 10 and 14 a year ago. So that's been a dramatic change. Watching all those things and see whether we've sort of bottomed out now. Sydney and Melbourne are starting to increase again. So usually we're following a few months behind them. So maybe we're around the bottom of that sort of period now, and we might see that start trending upwards. But that's certainly some things to keep an eye on with that. We'll keep you updated, and more than happy to give you some relevance in relation to how that reflects on your property. And if you've sort of been out there for more than 60 days on the market, then looking at some of these data, we've got all these numbers that we can run through and give you some context individually. So just reach out and we can do that with any of the team at any time. So
come see the rentals.
Yeah, that's right. Yeah, look at that. So yes, definitely. And look, there are lots of opportunities for that too if the prices are not there. Showing it, renting it for a year or three, and then sort of reassessing, looking at where the market's at in that point, and if it's recovered the little drop that we've seen, might be back above that again, and then it might be a time that somebody can get the price that they want rather than selling it for 50 grand less or something like that now than they really would like to get. So so good time to look at all those options. So anyway, I've probably rambled on again too long, so we'll let you all get on with your Monday. Thanks for tuning in, and we'll see you next week on the update.